Riley, who will introduce our speaker.
Thank you very much. Hello, everybody. First of all, I'd like to say I'm very honored to be here. My name is Danny Riley. I started on the mercantile floor for the Board of Trade at 18 years old. I've run different operations on the floor, but the biggest one that I've run, I ran the largest S&P index operation in the world. And during that time, I got to meet Marty, the Pitbull Schwarz. And what I would say is that if you're driven to make money, if your goal in life is to try to succeed, Marty definitely has those tools. And he's taught me many of those tools. And not only those tools, things that I use when I trade every day, but I also use those in my daily life. I was going to put a couple of words together to express kind of who Marty is. Yeah, I got a trading ticket. One of the top world independent traders, no doubt about it. I worked with him. I worked with George Soros. I worked with More Capital. I worked with GLG. I worked with Citadel. And I've seen just about, I've been in the Middle East. I did business for Sheikh Mohammed. I've been ADIA, the world's largest investment firm. And I've never met anybody like Marty Schwarz. So today I think what you're going to do is you're going to get a very, very good look at how one of the best independent traders in the world operates and works. And then when I thought about some of the words that I think that would kind of go along with Marty, I came up with intense, dedicated, and focused. And then at the last thing, one of the things that Marty's taught me is that if you want to make the money, there's no other way to do that but to do the work. And Marty's proven that. Thank you for inviting me, Marty.
I want to thank you for taking time out of your day to come here and spend time with us. We have some handouts here at the end, some articles that I had the good fortune to be in. I also have a syllabus, if you have interest, along the way where you want to supplement your academic rigor here. I'd like you to indulge me for a few minutes as I reminisce about my experience here at Amherst College. It's hard to believe, and my knees are telling me it's correct, that I got here 50 years ago this September. In fact, it's astonishing to believe. It was an experience that would help to influence my destiny. The core curriculum which we had, which you may or may not heard, was one of the toughest academic programs in the country. I was overwhelmed when I got here. I was from a public high school in New Haven, Connecticut, and like most of you, I was in the top until I got here and met the preppies. And then I had to fight for my life. I saw grades. We had numerical grades back in the old day, and I didn't know they went so low. 37 in physics, 42 in calculus. 6 weeks grades, I don't think you have those anymore, but that was sort of they had control over us. I got a 67 in English. They used to send over cans of red paint to the English department to bathe our compositions in. 35 years later, I was the author of a book published into 5 languages. So in other words, what didn't kill me made me stronger. This place tried to kill me for about a year and a half. My parents had always instilled in me the idea that I could achieve anything as long as I stuck with it. My mother was quite remarkable. She was the first of immigrant parents, and she went to Syracuse University, where she was Phi Beta Kappa, and she claims because she wasn't attractive, so she didn't study all the time, but she was pretty good. When I was 6, she had to go to work because we weren't making that much money in the family. So she went to teach school, and 4 years later, I grew up in New Haven, Connecticut. She had a master's from Yale, which was one of the few women, I think, at that time that had done it. So I had a lot of inspiration from her. It's ironic that I'm back in Converse here in the library, because in the fall of '63, we had to check out reserve readings here and to do our assignments. No computers, no materials online. We were basically Fred Flintstone. We were back in the Stone Age. I roomed in Stearns with 50 other men, 80, I lost track. There we had 2 payphones in the basement, so if you wanted to be socially eligible, you had a big problem. It was hard to get a call out. So they kind of steeped us in books, athletics, and Converse Hall. 1 month into our freshman year, President Kennedy came to dedicate the Robert Frost Library. Helicopters landed on the athletic fields where the baseball field is. Excitement was everywhere. 4 weeks later, our young president lay slain in Dallas. On that Friday, given with our Amherst curriculum, November 22nd, a friend of mine came down the first floor hallway of Stearns and incredulously related that the president had been shot. Of course, in typical 1963 Amherst fashion, I had a 2 p.m. Friday physics lab to attend. By about 3 p.m., after we learned the president had died, the remainder of the lab was canceled. The campus and the country was in shock. As I persevered into the second semester around spring break, I was faced with fraternity rush. I was the last one accepted into my pledge class in a program which was known as Over the Quota. Very good for your ego. Which basically meant if you persisted long enough, they would have to take you. And I was persistent. Once again, it didn't kill me, so it made me stronger. All these experiences have subsequently contributed to my success. And I went out with a group of students last night, and I'm happy to tell you, even though we look back glowingly on the core curriculum, that the student body, in my opinion, is every bit as sharp as anything that was here when I was there. In fact, I was telling Danny, I said, when I was a freshman, there were 400 men in the class, and now if you have 1,800 students, you got 225 men. It looks like we got almost a quarter of them here now, but you're the best of the best, and I'm here to tell you you can achieve anything you want if you put the work in. I'm sure most of you knew that. By my junior year, 3 of my roommates in the fraternity house and I represented 4 out of the 11 starters of the varsity soccer team. So I was vindicated by being over the quota. There was a lesson of never giving up. I stand before you today that you can accomplish your dreams by persistence and hard work. Then I went on to Columbia Business School after Amherst. The Vietnam War was lurking. I had no money. I went for 1 semester, and I hated it. As I said to my friends last evening, you'll never be in a place with the extraordinary talent that you are here. So savor it, enjoy it, and just cherish it. I took a reserve deal in the Marine Corps. I played too much in the backyard with my brother with cat pistols. And I did 8 months active duty in Quantico, Virginia. The deal I had was they wanted more reserve officers in the Marines, and that was an extraordinary challenge. After completing that, I returned to Columbia and finished my degree because all I wanted to do was go to Wall Street and make a living. The first thing I did was go to work for a firm named Kuhn Loeb, and for the next 9 years I was a security analyst. And what I laid out here was there are 2 different components of investing, really. There's fundamentals, where you study the attributes and business model of the company and go through various valuation. Warren Buffett's mentor was Ben Graham at Columbia, and he wrote the Bible called Security Analysis, which is listed at the top of the syllabus I have here on the list. I made it through there, and eventually I made a good salary. However, I had a gambling pension, which still lives strong in my heart. In fact, my wife last week, when I was in a bit of difficulty in an oil position, said, "You're a degenerate gambler." Fortunately, I bet most of the winnings, the subsequent winnings. But I can give you a tip along the way. I met my wife, Audrey, 37 years ago in 1976. And she basically turned me from a loser into a winner. I recommend it to everyone. You're going to run the powerhouse, you said to Biddy. You're going to be disco queen. So what she did was she took pressure off my ego and allowed my training and skills to flourish. I was talking to President Marty today, and I said, one of the things that I used to think about after I left Amherst was that I compare Amherst and our experience to a railroad train. And there's two tracks on the train, and one is our intellect, which is superior, and the other is our emotional development, which is a little behind. I think it's probably a great deal better now with the co-ed campus, but in an all-male institution, it wasn't the greatest situation. My wife-to-be came to my 10th reunion in 1977 and listened to us speak on various panels, and she said to me, "Boy, were you guys backward." So, cherish the experience, and what I did subsequently was Audrey and I got married in 1978, and the reason I'm giving you a retrospective is I want to give you an evolution of my career. She gave me enough confidence. I worked for 8 years at that point with various brokerage firms, and I'm not a corporate guy. I'm a entrepreneur, lone wolf type. I want to get 100% of the profits. I want all the action. So now, in the current environment, you have all kinds of vehicles that afford you leverage when you have no money. I needed leverage. Well, options evolved in the 1970s. The Chicago Board of Options Exchange started around 1973, and then they came up with this new vehicle, puts along with calls, and that gave me the opportunity with a small amount of capital to develop a methodology. And what I did in 1978, after I got married, was I closed the door to my office and I said to myself, I got to build a methodology to succeed. I said, you've heard the line before, this is no longer a dress rehearsal. I was 33 and time was a wasting. And I didn't want the mortgage and the two car payments, so I said I better start making a lot of money. So I started reading a lot of periodicals. I got out of Barron's, and I'm mathematically oriented, not super sophisticated. I believe in keeping it simple. But I used a lot of moving averages, and I basically call myself a synthesizer, not in the music field, but in the mental field. And what I did was I took various approaches of other people, and I kind of made it into my own amalgamation. And what I needed to do was prove that I could be successful. I had a wife, I wanted to have a family, and I wanted to have a future. So I dedicated myself to coming up with a methodology. And the place I decided to do it was the American Stock Exchange, where they have listed options, and I could get huge leverage. It worked out better than I ever dreamt. That's one of the things I'm here to inspire you today about. Sometimes your dreams can be better than you dream. In 1980, I earned $600,000, and in 1982, I earned $5 million. But 1982 was a watershed event because a new contract came into being, and that was the S&P futures contract. And that was made for me because I was a market timer. One of the things I wrote about in my book in the technical section was red light, green light. I used moving averages, and basically I like to think of the market I like to compare it to science, nature's events. For instance, if you take a sine curve and you go up and down, basically I want to sell at the top of the sine curve and buy at the bottom of the sine curve. And that's what I'm looking for. I'm looking for a change of velocity in the market when I was making a trade. And that seemed to work pretty well as I developed it. And the natural phenomenon that I equated it to was the tides. You have two high tides and two low tides. And as long as I could see something in nature that worked, I wanted to try to replicate it in the market. And that was what I was able to do. And I became one of the best S&P traders in the world at that time. But markets are living, breathing organisms, and they're continually changing. So that you have to adjust with them. That's the extraordinary challenge. You have to continually change your methods because in the late 80s they started program trading, and they were doing it, they'd send a batch of orders to the floor on paper. Now they send it in nanoseconds. And so as the market became more ruthless or more efficient, however you decide to define it, I had to choose a new trade. And what I did was I evolved into trading oil futures. And that became extraordinarily good because I was very good at options. But that afforded me, when I turned 60, even though I don't look it, I'm 68 now, I said, this is my Ray Kroc decade. I was really, in the 50s, the 15-cent hamburger arrived. You weren't born then, but take my word for it, 10-cent French fries. We didn't know they killed you at the time, but I was 160 when I got to Amherst, so you can see what happened. But the Ray Kroc decade actually took place, and I had my biggest year ever last year. I'm not trying to brag. What I'm trying to explain to you is you're continually evolving and adjusting. As Danny predicted, I would go off my script now, so I've got to go back to where I was. Now, what I'd like to explain to you is, for the first 9 years of my career, I was a fundamental analyst, and I don't know the knowledge level here, but basically what I was doing was analyzing various companies in various industries, and looking at balance sheets, income statements, and making forecasts on earnings. That was fine and it was enjoyable, but then you had to go out on the road when you worked for a brokerage firm and do tap dances, I call them. You'd go to 6 appointments in a day and you'd be dragging, and then they'd throw you on an airplane and you go to the next city. So as you get older, it becomes, when you're in your 20s and you have college friends throughout the country, it's very glamorous. When you get older, it's not quite as enjoyable. So what we did with the fundamentals, and what you're probably doing in your investment club, is analyzing companies. And one of the approaches I put on the syllabus, I don't know whether many of you are familiar with Peter Lynch. He's a world-famous investor. He was at Fidelity, and he basically had an extraordinarily fine principle. What he said was, your best investments are in companies that you see in your everyday life, whether it be a McDonald's or an Apple computer or whatever. But I have friends at my club, they've been riding Apple down from 700 to 400, and I kept telling them, the chart doesn't look good, the chart doesn't look good. And the reason the chart didn't look good is because people knew that their gross margins were going to be squeezed, because what occurred as the iPhone saturated the market and Samsung gained a greater share of market. So fundamentals will take you to the spots you want to look when you invest your monies. If you're not doing this as a full-time profession, I talk about time horizons. One of the things, when I talk about the psychology of trading and investing is a lot different than trading. Trading is a very short time horizon. And the reason why I became a trader was, as I told you, I'm an inveterate gambler, but I also needed leverage. And that was the way I could make a lot of money or blow myself up as far as my capital position. So one of the principles that you need to use are stops. Well, I would always talk about uncle points where you control your risk, because you're probably far better mathematicians in this room than I am, but if you lose 25%, you got to make X percent more to get even. And, you know, so I didn't give you the answer because I don't want you to prove me wrong. But we all have the answer. But the point being is, if you let too much of your loss occur, it's much harder to climb up the mountain. The other thing is your emotional state is pretty rattled and devastated. So one of the things that I saw in the investment club's portfolio is I did their stock charts, and when they're in uptrend, it's good to let your profits run. I'm kind of making this thought process for the majority of you who will, if you get out of here and you accumulate capital, will most likely become investors rather than traders. As a fundamentalist, you go through the earnings and prognosis for that industry. But the other part of the valuation, there are two aspects of valuation of stock. There's earnings times price earnings multiple, and the price earnings multiple is basically a capitalization rate. A lot of times it's related to where interest rates are and the growth prospects for that particular industry. But you always want to use stops. Now what I did was I went from being a fundamental analyst to being a technical analyst because I felt more comfortable with math. And what I did was I started buying chart books and taking a ruler and just drawing lines. It was pretty simple. If the line was pointing down, I wasn't interested in it. If the line was pointing up, I was going to try to ride the trend as a momentum trader. I subsequently also developed a lot of other methodologies, which I'll be happy to discuss in questions. The important thing, one of the things that I wanted to talk about, the psychology of trading and investing, is it's extremely important that you be honest with yourself. You have to look into your own personality and choose something that fits who you are, truthfully. If you're nervous, I have a brilliant son, and he's still learning how to trade, but I think he'd be far better stretching the time horizon out. So when you invest, you can stretch the time horizon out. If you're a trader, you can use more technical analysis to prevent yourself from making a large mistake. But it's very critical that the approach you choose to take fits who you are as a person, and that you have to be honest with yourself. A man or woman who's can't watch it full time, needs to use a certain discipline and a certain amount of work. I don't want to say crazy Kramer, I want to say enthusiastic Kramer, who's on TV, always talks about doing the homework. And as I look around the room, I'm certain there's a lot of homework done here. So when you do investing, you're playing with your own capital and you want to make it grow to give yourself financial security. So it's critical that you put the work in and also use extraordinary discipline to prevent large losses. But that to me is the way you determine which kind of approach is best set for you, because in trading, it's a much shorter time horizon and there's much larger risk parameters. So you have to see what you can handle as an individual. I wrote down here emotion, fear and greed are the two aspects which everybody knows. But I took a big loss in the last couple of weeks. I was doing much too well early in the year. And the volatility came down, and I'm a short gamma seller, which basically means a negative gamma seller. I want to be the bookmaker in oil. So I sell puts and calls on both sides of a range and try to collect the premium. And by that I mean most options, 90 to 95% of options expire worthless. So if you have the bankroll, which I did have, which I do have, you can do this and make quite a bit of money. But when you get a rapid movement, you have to adjust your positions. It's a little more sophisticated in options. But one of the things you must guard against in your own approach, and I'm sure you're aware of it in athletics or in the classroom, is when you get too cocky. When you get too full of yourself, the next thing that's coming is a school bus down the road. And sometimes it has your name for the route on the destination. So that happened to me recently, and despite the fact I've been doing this for 43 years, you never stop getting reminded of the old what can go wrong question that I got when I was a security analyst. One other approach in investing that I think is a good one to know is dollar cost averaging. If you decide, when you get out of here and you start to accumulate capital, I think the best thing to do in investing, if you can't watch it all the time, is to have 10 different companies perhaps in a portfolio, and there doesn't have to be a large amount of money. You can buy 10 shares, 50 shares, 100 shares. But you go through the discipline because you have youth on your side, whereby you put a regular amount of capital that you can save into a portfolio of stocks so that you're taking advantage of the sine curve, the ups and downs. But what happens to most everybody is when we get to the downs, we all get nervous and sell. And it happens to everyone. So you have to, one of the best approaches you can possibly have is one where you have a steady stream of capital going to build a fortune along the way. And if you have the right stocks, now what you have to do is if you have, eventually if you have some good names, you want to let those continue to prosper, and the ones that aren't doing well, you have to weed out of your portfolio. And that perhaps is the toughest decision of all, because that goes back to admitting that you were wrong. And that's where the good wife comes in. She gives you the confidence to soldier on and take your beating and go to fight another day, as the cliches go. What I do in trading, which I alluded to earlier, is I use a lot of mathematics, a lot of ratios. I draw a lot of trend lines and charts. As I mentioned, it's a shorter time horizon. I use tight stops and I get in if I'm and out if I'm wrong. Last week I was trapped in oil and it was going down and I had way too big a position. I mean, I joked with people in my club. I think if they told me how many barrels of oil I controlled at that point in the time, I would have passed out. Right? Yeah. I think I might have had Saudi Arabia covered. So last Monday night I said to friends, I think I met God and he told me I was an idiot. So one thing you have to keep in mind is this is like baseball. It's a batting average and you're going to make mistakes along the way. The key to the game is persevering and bringing the right, as they say, bring a gun to a knife fight. You want to have the right tools at your disposal. When I became successful, I had to make a decision. It's kind of like the old Wesley Snipes, Woody Harrelson movie. I had to decide whether winning was more important than my ego. And what I found was divorcing one's ego from the trade is critical. Another thing I wrote down is don't trade during periods of family stress. I always talk about when a child's being born. Get the hell out of the market. You know, your wife needs you. You gotta help with the Lamaze class and everything else. I mean, you don't want to be making financial decisions when you have more important things going on. The other thing that I've alluded to over and over again is money management. That's one of the more critical things in investing. You've got to just decide that you want to win, and I know most of you do. I wrote down, why do most traders lose money? been there, done that, because they'd rather lose money than admit they're wrong. I have a daughter that trades with me, and she's more stubborn than I'll ever be. She won't get out till the trade's profitable. Doesn't matter how far down she's got to ride the position. She usually wins, but I have had to have a little extra hair added to the back of my head because she, we're like two rams butting heads. Another thing that I do, which you can very much find appropriate, is it's kind of like the guy on the battlefield. I prepare a daily sheet every day, even tonight I did it. It's just ingrained in my brain. I called my brother in New York, who's a lawyer, who's 4 years older than I. I said, "You want to go out to dinner?" He said, "Yeah, I got to work. I'll be ready around 7:30. I said, "No, Stacy and I are going. My daughter and I are going out at 6. I'll see you later." And I said to him, "Why do we work so long and hard?" He said, "I got to work 13 hours a day." I said, "Why, Jerry?" I said, just bill them anyhow. But it's ingrained in us, it's just, and I know you can relate to that. So what I do is I prepare a daily sheet of all my ratios. It's in my book from when I did one in 1997. But basically what I'm doing is the market is very emotional during the day on your sine curves and your roller coaster. And now with all this electronic trading, it's worse. So what I try to do is, just like I have up here, I have some notes. I have a large number of mathematical ratios, moving averages, ad nauseum on my sheet. And what it helps me do, it's my security blanket. In a time of panic or market, when we had the flash crash a few years ago, market was down 1,000 points, and what's going on, Danny? What's going on? I mean, and then it rebounded 500 points quickly, and it was a crazy period. But what I find is if you have a reference sheet and you have support areas on stocks, you have to hold your nose and jump in and buy. And what I do a lot of times is I'll scale into a situation because I don't want to put my whole position on at once. And that's very useful, but I know that I'm talking to the right group because you're so attuned to academics and very disciplined. I don't want to get too repetitive here, so I'm going to open it up for questions and see how I can help any of you, if possible, or spur you on to a career in finance or avarice or the joys of being able to not worry what it costs sometimes, or my passion of thoroughbred racehorses. So that's my, I've had the high honor and distinct privilege of winning Eclipse Awards the last 2 years, which is equivalent to winning 2 Academy Awards in a row in the filly and mare turf division. And I had the extraordinary thrill last November winning the Breeders' Cup race at Santa Anita. Won the Irish Guineas, the French Guineas, the Italian Guineas, finished second in the English Guineas, won the French Oaks and 3 Beverly D's, which nobody else has done in Chicago. So it's a heck of a ride. I call the money the lubricant to sort of making things easier, but it doesn't solve life's problems at all. When you have children, all you do is worry about them, and it never stops. Thank you.
Save your question.
Yeah, so how do you handle a situation where the fundamental analysis and technical analysis contradict each other? And using an example from your talk, Apple would be a great example.
I have friends at the club. They love the products. One guy was a captain industry in Canada, went to the Predators Ball with Milken in the 80s, did so many private equity deals, and he likes the iPad. Well, I told him the chart stinks. So basically, I think both have to agree. And if they don't agree, there are another 6,000 things to look at. So move on down the road, or go short.
So out of personal portfolio interest, I mean, Apple's priced right now for 0 to 2% growth, which I find
Well, they report tomorrow, I believe, so
Right.
they get a lot of more information tomorrow. They report earnings, you'll see their gross margins, and it's, I don't want to say it, but when I spoke 4 years ago, a friend of mine in Florida was in an MBA class. I went and spoke, and I used the Peter Lynch example. I said, you should probably invest in situations that you're familiar with, you know, whether you like Bed Bath & Beyond down the road, or McDonald's, or Panera Bread's been a terrific stock, or Chipotle. The thing is that there's a saying, the price is truth. I don't know if you've heard that before. The price is smarter than the fundamentals. Most of the time, the price, I'll give you an example, which I hate. When Marty and I lived in New York, I had a friend over who was in the market, and his brother ran Solomon Brothers Institutional Desk at the time. And he gave me this great quote. He said, some people just have better seats in the theater than others. You know, I don't know how much you pay for those up there. Some of these
They came with the tuition.
I'm going to do what my wife will tell me. You sound like your father. His was $200 a year. It was $2,200 when I got here. Yours is $60,000. Let's see. That's almost right, because Audrey and I left New York Saturday morning, and when I left Amherst and went to New York in 1967, the Triborough Bridge was 25 cents. Now it's $7.50, so it's 30 times. So we're almost in equilibrium. The question is whether 2,200 was worth as much as $60,000. Time will tell. Don't be shy. Yes, sir.
What do you recommend, or what did you do to figure out what type of investing you were, what approach to investing worked best for you?
I used to tell the story. I used to take the Peter Pan bus outside sometimes to relax in front of Hastings, and I'd go up to Hinsdale Racetrack. And then there was a time my roommate and I, my senior year, he was a junior, he ended up leaving Amherst after 3 years, not because he was having a problem, because he went to Columbia P&S. But it was April, and it was time for the Wood Memorial and Aqueduct, so we went all over town writing $15 checks, filling up the car and headed for the racetrack in New York that Saturday. I think we were socially backward. But I think you just have to see who you are as a human being. You know, that's the key. You know, being honest with yourself. For most people, it's investing, and most of you're probably very methodical and academic, and that's a great thing. It's tremendous to be able to build a portfolio of value. I'll give you a funny story, at least I think it's funny. I was in 101 Stearns my freshman year, and my roommate was from Lehighton, Pennsylvania, and he had been president of his class and president of the school, and you were only supposed to hold one of them. And it took 2 months into he played freshman football, and it took 2 months into I was playing soccer, and it took 2 months before he told me his father was a radiologist, because up until then he told me he was a farmer. And he and I both had a penchant for gambling, so we liked the horses. So in spring break, he had a 56 T-Bird he drove, and he flew a Piper Cherokee. After I found out his father was a radiologist, he told me they had an airstrip on the farm. So I get a call. I live in New Haven, and he's in Pennsylvania, and we're going to come up 5 days early over spring break to work. He calls me, and I said, yeah, where are you? How come you're not at the house? He said, well, I landed the plane in Bethany, Connecticut, and it was a dirt strip. He says, you can either walk or fly back to school. So I flew. But I'll never forget looking out the papier-mâché wings on the side, wondering whether they'd hold together. So we landed at LaFleur Field, which I tell my wife every time we drive by there. I think I'm in triple digits now. And we came here 5 days early, and we worked on a system for the racing form. Every day we went down to Hastings and got the racing for them. So we were gamblers. So I think the most important thing is to know who you are. And most of you are going to choose a safer, more practical approach. But if you like numbers and you like math, you can become a trader too. They're both semi-reputable professions. Yes, sir.
Since we're on the topic of gambling, what do you take on your Herbalife side?
I don't know enough about it, but seems like there are two large egos butting heads, and we'll go with caveat emptor there. We'll see how it plays out. Although I must say that Mr. Icon's had a hell of a year this year.
So, two questions. Was your fundamental, like you started as a fundamentalist, was that inspired at all by Benjamin Graham and his like whole school of
It was the
people at Columbia at the time? And then my second question is, what's your favorite casino game?
That's a good question. The reason why I became an analyst was it was the best entry into Wall Street. I can give you a good example. When I got out of Columbia, I came back from the Marines and they had a trimester, and I went 3 straight semesters because I'd done one prior to going in the Marines. And I wanted to go to Harvard, and I wrote a letter to the legendary Dean Wilson, who was the most extraordinary man here. He's the one that the Mission Center is named after. And he was like a father figure to so many people. He was extraordinary. And I got waitlisted for the day I was getting out of the Marines. The Harvard was starting the next day. And so I figured, the hell with this, I can finish a degree in a year, and I just wanted basically my passport stamp, because business school, what it does is it prepares you to be CEO of the company. The only problem is you're 25 years too young to get the position. So I just wanted an entry level into Wall Street. I got out, and it was a terrible recession. The market bottomed in May of 1970. I had 6 job offers. I'll give you a line that I recommend you always use. We're not interviewing. I said, but somebody gave you your first break? And I would always talk my way in the door. And I had 6 job offers, and I had there's some guys who were far wealthier than I who were in my class who ended up running brokerage firms, but they couldn't sharpen my pencil buck, so whatever. Happy the way it turned out. As far as gambling goes, I played a lot of sports, carrying too much weight now. My knees are bothering me. I used to like to play craps, but you have to stand up. So now I'm a very large bettor in the the NCAAs. Our whole family goes to March Madness every year, and I get to sit down and make large wagers. I had Louisville. I had them when I left after the first weekend. I had them 3-1 to win the whole thing, and I'm hoping there's a nice check in my mailbox when we get home.
It seems like there's a lot of literature that suggests that a straight technical analysis, as markets have become more efficient, it's becoming tougher and tougher, if not impossible, to beat the market by solely using technical analysis. I know you said last year was your best returns ever, but overall, have you found it more difficult to beat the market in general?
I think that you have to move around the room from one game to the next, and that's what I did. Danny, for 5 years, was trying to get me to stop trading S&Ps, and I was a junkie, and I had been one of the best, and the game changed, and I stayed with it too long. It wasn't though that I lost money, I was just frustrated as could be. So I like to use the story, I don't know whether you had it growing up, but when I was a kid, we had a kaleidoscope, and you shake it up and you look through the tube, and it's a different picture every time. So the challenge in the market is to find a picture that appeals to you and test it. And see whether you, part of the fun is doing the research, whether it be mathematically for technicals or for fundamentals. But the major problem people have now, fundamentals is the Apple story. 4 years ago, when I spoke down in Florida, I gave them the Peter Lynch analogy of picking a company that's products appeal to you and you know in your everyday life. and you're all tech savvy and figure things out, but they have to be confirmed by the technicals too. That's why I gave you on my syllabus a Edwards and McGee, which is the Bible of technical analysis. But what I started doing was I just started drawing lines, uptrends and downtrend lines. And what I love is pattern recognition. So what I tried to do was, what happens is you get more experience. It's like seeing an old friend, and that's the sixth sense of trading, where you've seen the situation before, you recognize it, and it's sort of like I had the self-preservation last week when I was in this oil. I had 25,000 put options. Every dollar would have been $25 million if it moved against me. So I was in, Monday night it traded to 86. I had rolled down that day from the 85 strike to the 83. It cost me $4 million to roll down, but I was about saving the mother load and getting out of Dodge. My wife has me on probation right now. I have to be in by midnight.
I would imagine as trading has become more electronic, I imagine your early days, a lot of trading is dictated by brokers on the floor, and I'd imagine with less technology, the market.
There's seats in the house.
Yeah, the market was a little more emotional and volatile. Would you agree with that? I would imagine.
I think it's more emotional now in a way, because we're defying science. We're having 6 sine curves in a day, and I'm getting high and low tides every 2 hours instead of every 6. There's so much. I told Danny. Danny came to me 25 years ago. He said, "What do you want me to do for you in the pit?" I said, "Watch who wins and tell me what they're doing." And the same thing. What I tell them now is, I call it pushing water in the bathtub. The programs are meant to push you to the brink of making an error. And basically what they're trying to do is, in the old days, he would sit with a physical deck of stops on the upside and the downside. Now what the computers are trying to do are run those stops. And that's what the algorithmic people are doing. They're finding out psychological points where they can break the market, and whether it's, we used to have a song that we would sing. I wasn't allowed to sing because I was told to be quiet at the fraternity house, but it was called Take Out the Highs and Take Out the Lows, and that hasn't changed. Now, with the electronic trading, it drives me a little nuts because what they're putting a lot of fake orders. I'm not even up. I just know what I read, and Danny knows a lot more than I in that regard because he studied it. But they're attempting to, there's a lot of phony orders. They could put in 50,000 orders in a nanosecond, supposedly, and then they cancel them. So it's like it's trying to head fake the pipe, so to speak. And sometimes they'll try to, in a particular commodity, they'll try to sell into it, and they have ability to judge how the market reacts to that amount they sell into it. And if it doesn't react severely, they'll go the other way. It's like scientific testing. I had one trade, a pattern I noticed. I don't know whether it didn't work last time because I got burned, but I had my son back tested. As I said, he's a very good mathematician. And I noticed about 4 or 5 years ago on the quad witching, which is 4 times a year, on the March, June, September, and December expirations, Danny would do a lot of calendar spreads where they would buy the front month and be short the next quarterly expiration. And what I would do is the S&P futures on Friday morning settle out for cash on the price. So they would try to gun the opening so the settlement price would be higher than the market actually traded at any one point in time. And they would be settled out for cash, and the following contract that they were short would then have an air pocket under it, so it would come down. So then what they could do with this little game that was going on that I noticed was buy the cash portfolio and have the spread on for a very good percentage rate of return with no risk. So they're all. So I noticed that, and my son, I said to him, back test this thing for me, and it was like a 75, 80% probability of success. So I said, I'll take it, and it was 80% up until the last one. So now I'm 0 for 1 on that one. Yes, sir.
What would you suggest for these young people when they come out of college if they want an investment? How do they get started?
Well, check the trust fund. So you have to save. It's like when we were kids, they used to have Christmas savings account. You know, your parents would put away back in the 50s $5, $10 a week and save the money and build up a little nest egg. And the only thing is, in these major metropolitan areas, it's so expensive. It's extraordinarily difficult. But I'll go back to another cliche: where there's a will, there's a way. I mean, you have to have a long-term objective. One of the things I wrote about in my book, which I didn't discuss, was the idea of having a plan. When my wife said to me, "You can do it, you can do it," and then baseball been very, very good to Chico, I decided I needed to have a plan. And what I did was, I stopped losing in 1978, put my plan into effect. I ended up with $100,000+, bought a seat on the American Stock Exchange for $92,500. Borrowed $50,000 from my in-laws, which you want to talk about pressure, that's the ultimate. Paid them back in 6 months, and then I was off the hook forever. But you got to have a plan. And it's sort of like when you decide how you're going to budget your time here. It's no different than that. You allocate your time to getting your work done. It's the same thing. Anything else? Yep. You can come home and we'll take you home.
Last question for you. As far as developing
How
your...
much do I have to pay you after the thing's over?
Nothing. As far as developing your style, do you think investing is something you can basically pick up on your own, or do you feel like it was something you kind of... people talk about finance being an apprenticeship business a lot. Do you feel like you would have been able to become this investor without spending all these years working as a securities
I'm
analyst?
still trying to become an investor. It's very hard for me. I have such a hair trigger. In the day of the internet, and 15 years ago we used to get our sheets mailed to us. Now you get a report card. I love getting a report card every day. My daughter works for me also, and she does the P&L every night. So 7:30, when it's 7:34, she says, "Leave me alone. I'm working on it now." Because that's when the exchange numbers are put out in oil. It goes back to who you are. What really turns you on. I think doing analysis is terrific, but I think it's a great training ground for learning how to value companies. But that's only one side of the equation, because as I told you, the price of a stock is based on earnings times the PE multiple, and the PE multiple is based on a lot of different things. It's based on optimism, pessimism, interest rates, etc. So you got to be in the right part of the cycle. You need Bernanke printing a lot of money and not running out of ink. Yes.
What's the best or most memorable trade you ever made?
The best trades I've ever made have been losers. I talked about in my book. On October 16th, 1987, the market was down 508 points. It was down 16%. I went long because I'd never seen anything like that. And I went home long some S&P futures and some options. I think I took $300,000 loss that next Monday, and I was thrilled. The market opened down 200 points that Monday, rallied to down 100 about 10:15 in the morning, and I got out. I don't even think the options opened that day, Danny. But what happened with the options where I was saved was I was long calls, but the volatility exploded. So with the volatility exploding, the premium level was enormous. So I got out of the options even though I was dead wrong, somewhat unscathed. Now Danny will tell you, this was back in the old days, and I think it was Soros, what was the guy's name who had the
There was a
order?
guy by the name of Larry Israel, he worked for Lehman Brothers, or Shearson Bank.
The Soros order.
Soros told him to sell 3,000 at a price, and he offered it down to the price. It was way
And there were
above.
fistfights over the entrails because, 3 minutes later, while he was still getting names, the thing was up 20, 30 handles off the bottom. I had, Danny wasn't doing that particular order. He started the year later, but I was screaming at my clerk, what did I buy? What did I buy? I was trying to cover something, some other situation, I can't recall. And nothing. The sharks were carving it up in the pit.
Well, what he means is when the order went in to sell, all the paper guys, the customers that were trying to buy it, the guy in the pit was avoiding. He was selling it to the.
I don't
other
see you,
locals.
I don't hear you, I don't know you.
He was avoiding selling it to Marty's order in order to sell it to the locals in the pit at a discount price.
Who then would deliver brown paper bags at the end of the month so they could go to the various clubs and be, that didn't turn out that good for them in the long run. I want to thank you for coming. I appreciate it's a joyous experience to return to the Ferris College and see such extraordinary young people. It's invigorating. My wife went to a class today and she wants to enroll. However, we decided that she wants to become the social director and have better interaction. What's the name of the place? The Powerhouse. We spoke to Biddy and she's got new social plans ready for you to interact and have a much better social life here. So thank you for coming. I have some handouts. I don't know whether we have enough because we got better attendance than I thought. So if you just let Eric know, although some of these may be online, but you can probably figure out how